All right, hello guys. So in this video I'm going to be showing us how to use Fibonacci retracement tool for a bullish trend. Remember in my previous videos I showed us how to use Fibonacci retracement tool for bearish trends. Ensure to watch those videos. Okay, you can go to my page. You'll see Fibonacci retracement tools for how to use Fibonacci retracement tools for bearish trends. Okay, so in this video I'm going to be showing us how to use Fibonacci retracement tool for to identify bullish or to take bullish entries, right? So first of all, what we want to identify in this hack, how do we use this hack? How do we use this? This is the Fibonacci retracement tool. You can find it on your toolbar. You can find it on your toolbar on the trading view. It's on every trading view. You can see it there. Okay, I just added it to my favorites. You can see I just added it to my favorites. See the Fibonacci retracement tool here. I just added it to my favorites. Okay, so I will go back to full screen. So right, first of all, what we want to identify is a breakout. Wherever there is a breakout, we usually notice an impulsive move. Okay, I'm going to show us a few examples of how to use this tool. So right in front of us we have a consolidation and we have a breakout. You can see a breakout. So now after a breakout, there's usually a retracement. A retracement. So this breakout here is, see, it came down. See, it came down to this point and was just dancing around. But our aim is, to use this Fibonacci retracement tool to find out where to take entries. So we place, for a buy trade, we place our one at the bottom of the previous low and place it at the highest points which it moved, right? So that is where we're going to take our, we're going to how we're supposed to place it. So place our 0 at the highest point where it moved, and 0 and 100% at the previous low. So we're going to be taking our entry at 61.8. So price has been dancing. It didn't get to 61.8 at the first time. We'll still leave our entry there until price came and touched it to 1.8. You can see here it touched it. Touched 1.8, and we're going to put our stop loss at the 78.6 zone. Look at it, 78.6. That's where we should put our stop loss, and our take profit is going to be, TP1 is going to be at the previous high, right? And our TP2, you can take your TP2 to the next high after the previous high. So that's up to you, right? Yes, but for now I'm going to be sure this is just a simple and honest trade. You take your TP1 at the previous high, which will be giving you something about 1:3.64 risk to reward ratio, which is not bad. This is very fair, okay, for a good trade. 1:3, 1:3 point something, 1:4 is not a bad trade. So guys, this thing works. I've been using this strategy for a long time and I just decided to share it with you guys. Information is key. Always appreciate the person that showed you how to fish. All right, if you're like getting something from this video, please make sure you hit the like button and subscribe to my channel, okay? and make sure you comment, tell me what you're learning, and tell me what you want me to teach you guys more. So this is not just all. I'm seeing another setup here. Okay guys, see, we have a bearish trend here. We have a bearish trend around here. Okay, you see price has been making lower lows, lower lows, lower lows, lower lows. You see lower lows here, lower lows. You see lower lows. So, and we know that this trend has changed obviously from our previous entry. So we want to find out now what is going to happen. So good enough, we are seeing a breakout. In fact, before this major breakout, there is another breakout from a smaller trend. Guys, let's identify it. Let's identify this stuff. So see, from this smaller trend here, see, there was a breakout. Okay, this is a dynamic trend. The previous one we saw was a normal sideways consolidation, but here this is a dynamic trend. So it broke out of that dynamic trend, and this is what I'm talking about. From here to here, and then it retested. So we want to see where it's retesting to and where we should take it. So once again, we'll take our Fibonacci retracement tool and we'll place our 100 zone at the previous low and place our 0 at the highest point where it moved after breakout, and then watch guys, as it's 1.8 is the same place we're taking our entry. Take your entry there, put your stop loss below 78.6, just right below it, and your CP1 is going to be at the previous high. And take your TP2 at the next high if you wish, but TP1 should be here, then maybe TP2 at this point. You see, so guys, you see, very honest trade. 1.6 1:6.29 risk to reward ratio. Guys, this thing works like magic. So remember, we are not done yet. We still have another setup I'm seeing around here. See another setup I'm seeing. Okay, so I'm seeing another setup. You see, there was a breakout. There was a breakout at this point. The price, broke out of the major trend. Look at it as a breakout at this point. So it means after a breakout, there is usually what? A retest. So let's look at what happened. This retest here, we will still place our 0 at the highest point and 1 at the lowest point, and our entry is going to be at 1.8, exactly 1.8. This is just a sniper trade. Put your stop loss at 78.6, and then you put your TP at the previous high, or you take it a little above it if you wish, but to be sure, just put it here. Okay, 1:3. So you can see, just on one pair, you're making steady profits 3 times. Okay, 3 straight wins just on this strategy. So guys, this is not just anyhow video you're seeing on YouTube today. This is a hack. So do well to subscribe and follow this channel, my friends, and appreciate, show some love. Okay, thank you guys for following. I'll be waiting to see your comments on the comment section. Thank you.